What's going on, guys? Welcome to the Departures. Good morning. Welcome to the Departures Capital live stream. We're going to be streaming Canopy Growth conference call in about 5 minutes. So thank you for tuning in. We'll give you guys a couple of seconds to join up the stream. Oh, and then we are seeing Canopy up 5.42% in the pre-market. Sorry, it's too early for this. But we've got the conference call ready to go in about 4 minutes. What's up, Doug? The one and only Doug Whitaker. Good morning. Yes, we are awake. Happy Valentine's Day. Hope you guys had a good Valentine's Day. We're going to be streaming the conference call in about 5 minutes, like I said. So we'll see what Bruce has to say. But we are seeing the stock up 4.94% in the pre-market. Good morning, John. Wow, my mom's in here. Good morning, Mom. Thanks for tuning in. Aphria up 9% today. CGC up 7%. ACB up 3%. All right. So we can check into some of those as well. See what ACB is doing in the pre-market. Up 1.97%. Gold's making a really nice run today too. Yes, the market did react. The market did react well. We saw a massive miss for EPS though. Minus 38 cents, but over 80 million in revenue, so that's all right. I guess we'll take it. I think it will go green into the open, but yeah, we'll see. Yes, David, we are up early this morning. Hit that like button, guys. Let's try and get this stream to over 100 people before the conference call starts taking place. But we've got about 4 minutes until the conference call starts. Yes, I know. It's a weak ratio, but it's also very early. Wake and bake. That's funny. Stock up 4.73% in the pre-market. I wasn't expecting that. I was actually expecting the stock to be red, but we'll see what happens. Is Medmen a buy because it's very cheap right now? You think Geneva will continue its run? Tough call. What is Medmen trading at in the pre-market? Actually, we'll leave Canopy. We'll leave Canopy up on that screen right now. Oh. Canopy's up 4.55%. We are seeing the markets in the green as well. And we'll be jumping on that conference call in about 3 minutes. So we're going to take a look at a few more stocks. Medmen, not doing much in the pre-market. We'll see what happens for Geneva. I just want to check in on this. Okay, no, we're not getting anything yet from the conference call. The last time I did the Aurora conference call, my stream got demonetized because of the music. So frustrating. So we'll watch it for another 2 minutes, guys. Yeah, I think Medmen's at a good price right now. $2.83 in the US. The stock is looking pretty good. I mean, look at their 52-week range, $2.50 to $7. So we're sitting right at that lower end of the 52-week range. All right, guys. So we're going to sit back and take a look at this conference call in a few minutes. What's up, Victor? Thank you for tuning in. It's super early today. Nope, nothing yet. Let me know about the volume, guys, once the conference call starts. I will go back at about 8:30. One more minute. We are just watching Canopy in the pre-market right now. Up 4.62%. After this, they say the call is going to be about an hour. Good morning, John Thomas from Lake Mary, Florida. Good morning, everyone. DG slots. Good stuff, buddy. What's up, Steven? LOL, Matt's in the room. Aurora's gonna crash. No. Hit that like button, Matthew. Matthew Semick in the room. Biggest Departures Capital supporter. Biggest Canopy. Wait a second. Still nothing. Big Daddy is here, boys. What's up, Chase? What's up, Mohammed? Who else got that Amber Alert on their phone last night? Holy, that was loud. Anybody else? Anybody else here in Ontario? Okay.
Scheduled to begin momentarily. Until that time, your line will again be placed on music hold. Thank you for your patience.
No, they said we'll begin shortly. Good morning, Fort Stewart, Georgia. I'm a new corner with big interests. Nice. Just got in this morning like 2 seconds ago. Well, thank you for tuning in to the stream. Hit that like button, anybody new to the stream. We should see the conference call very soon. This music. They should play non-copyrighted classical music on their conference call. I did not see the Aphria rebuttal. Feel free to post that link. We're just waiting on the conference call right now. Nope. Amber Alert at 1 a.m. My phone was full blast too. Yeah, I thought it was the end of the world. I thought like North Korea turned rogue again and launched another missile or something. It was crazy. Kim Jong broke the peace. All right. No Mozart today because we got demonetized. It was ridiculous last time. Let me check. Thank you, Matt. Not that Matt. I heard Warren Buffett shorted Canopy before this. Yeah, I know, it's super sad. The little girl passed away. Super sad. I've just never gotten anything like that. Like the alert was so loud. All right, let's check in on this conference call, see if we're getting anything yet.
Call.
There we go.
Or answers that may be given to questions could constitute forward-looking statements.
Free music.
Actual results could differ materially from those anticipated. Risk factors that could affect results are detailed in the company's annual information form and other public filings
we'll be watching
that are made
the
available
stock
on
move
SEDAR.
as the conference
During
call
this
progresses.
conference call, Canopy Growth will refer to supplement non-GAAP measured adjusted EBITDA.
Perfect, guys.
These measures do not have any standardized meaning prescribed by IFRS. Adjusted EBITDA is defined in the press release issued yesterday, as well as the period's management's discussion and analysis document that will be filed on SEDAR. Please note that all financial information is provided in Canadian dollars unless otherwise specified. Following the prepared remarks by Mr. Linton and Mr. Saunders, the company will conduct a question and answer session during which questions will be taken from analysts. At that time, if you would like to ask a question, please simply press star, then the number 1 on your telephone keypad. I would now like to turn the meeting over to Bruce Linton. Mr. Linton, please go ahead.
Great. Thank you,
sir.
Welcome all. I truly enjoy our quarter ends, and that's in part because I'm not in the finance department, but it's mainly because in our world, the sector we're in and the company that we've created, taking time to reflect on what actually has occurred in a prior period only occurs when we do the preparation for this call, because we're kind of busy thinking about the next 7 quarters. So when I think about this last quarter, it's almost possible to forget that the first sale happened and that the company with the first sale of the first legally sold gram of cannabis was us, or to almost look over the fact that we went live at the beginning of the quarter on our next generation ERP system, which maps out the next several quarters of how that becomes a global platform, and how we have done a number of acquisitions, and maybe that all the meaningful investments we've made in this quarter, and I think in the next 6, 7, 8 quarters, keep showing really good yield on those investments. It's almost easy to forget that in October we moved more units, more containers, about more, maybe tanking, give or take a couple, than we did in the history of the company up to that point in time. And so all the activities around automation and creating that, and that we had cannabis coast to coast, and that we did a number of acquisitions that really the reason we do these things is we look at and work with companies and keep an eye on them and get involved with them for years, and then understand them. And when we make an acquisition, whether it's Storts and Bickel or Naboo, these things have a long time horizon. They add to our intellectual property. So when I think about having 32 issued patents and over 140 patent applications, it's because of the combinations of investments and acquisitions. And so Tim's going to do a great job of walking through the puts and takes of the quarter. But I'd like everybody on the call to also think out kind of how we do, which use a 5 to 7 quarter horizon. And that what we're doing and where we're going and the investments we're making are on things like science, having an actual focus group called applied science, and developing intellectual property, running clinical trials to create what will be phenomenal products for both rec and medical that will have the ability to be branded globally, but they start with science, outcomes, and IP. And so when you picture this building that we began in, we have another 240,000 square feet over 2 floors, which is got phase 1 of it waiting for licensing, targeting to be in March. We'll see when it is. That is all about GMP manufacturing processes, so that the science can turn into products, the product can turn into brands, and consumers can buy outcomes that are consistent and the same all the time. But that platform is multiple years in the creation and will have multiple years of benefit. The rules and regs, which we're now 5 days away from the inputs closing, February 20th, the government will then say we've had all the input we want, now come to the next generation of recreational products. It has a contemplated category called beverages. We have a building that's a little bit more than 150,000 square feet, which is being put up right now through the winter. The decision to do that building was made before there was actually the regs, but in contemplation of what was likely. And that building is expected to be complete May 1, which means that we can then begin to put all of the equipment inside, so that we can then begin to make the beverages, which will use the science that we've been creating for 4 years to go into brand extensions of Tweed and a bunch that are behind the curtain that I think people on the call will like and that customers and consumers will love. And they become the first of a kind, and they become something that's the reference file for the world. And then the 16 countries we're in, whenever they choose to have anything additional to medical that's federally permissible, we have the product set. So you can see where that goes. In the next 4 quarters in Canada, we're seeing, I think, a really well now stabilized, thoughtful program where the provinces have had a chance to get information and get organized even more and accelerate. And so we're seeing stores open on a model that we think makes a ton of sense in many of the provinces, which goes from us on wholesale to a box controlled by the government or a virtual warehouse out to private sector retail. And that has been what we thought would work, because people want to go to stores, they want to have discussions, conversations, and they want to do transactions in a place that they feel is part of the experience. Our sales in this last quarter, the first quarter of rec, proved our model out that works, and that what we're seeing is that is turning up from Alberta getting faster to Ontario now nailing it, and the rest of the provinces turning them up. We're operating stores in several provinces. They include retail, face-to-face, as well as, in some circumstances, e-commerce. And so the data set we're getting and the platform we're building and the experience we're having is all looping back so that by the time we get to Q4 this calendar year, you're going to have a lot more stores and a lot more products and a lot more people who want to go to them. I expect by that quarter we're having clinical trials in phase 2B that, if we're correct, starts to allow us to make claims on medical products. So Spectrum is this global product brand which starts to have specific and unique outcomes which starts to make claims. And that whole platform is now well understood and being educated in multiple languages. We are in a situation where I would say that the opportunity to export to certain European countries, there's probably what you could almost call a backlog that's formed a little bit because of the demand growing in those jurisdictions and the need to have GMP production assets so that we meet the standard. So those investments are turning up in that way. As we walk through this, one of the things I was thinking about this morning is we probably could and should highlight the cash per share. So when you're actually buying our stock, there's quite a bit of embedded value called cash. And that cash is aimed at all of the things I've touched on, accelerating through our 140 patent applications so that we get enough data to move it, making sure that with assets that we've acquired like Storz & Bickel, we should probably be contemplating expanding it because this is an automated, internationally certified ISO 13485 factory that with the things we're putting together is going to have, we expect, more demand through the channel, and they're already in 50 markets.
Damn,
so you can, as you make those investments, you can look out over a time horizon and contemplate that there's at least a company in this emerging sector that's investment grade, long-term thinking, and we hope and expect continues to attract more and more institutional shareholders so that we can actually continue to see the migration up into those hands long only. And on that basis, I'm very happy with what we've seen over the last year in terms of the names, quality, and total volume of institutional purchasers we've attracted. I'm going to hand over to Tim shortly, but there was a note in there about the fact that Tim, as we looked at for our next 3 to 5 years, because everything in our world, I need 3 to 5 year commits, that what the right thing was for Tim and for the company was to take that view and begin looking at an org chart that adds more senior and competent finance team members, because we have a really amazing but not really huge, not really actually sufficiently large finance team. And so you're going to see investments in that area so that we can not only do a great job in Canada, prepare ourselves for the U.S. hemp and other businesses and global, but also we have a function called Treasury now because we have capital. So Tim was thoughtful in where he was in life and career, but he's also clear that his objective is to be continuing in assisting and accelerating what we do with the board by Tim helping to prepare that and what we do on our ongoing M&A, because he is a very trusted and competent resource. So you may not hear him on the phone by the time we get to Q3 or 4, but he is in the building, and that I do greatly appreciate how Tim has conducted himself and how we've worked through this, and I would like to hand it over to Tim to walk through the details. Tim?
Thank you, Bruce, and good morning, everybody. I'll now proceed with the review of the third quarter ended December 31st, 2018. Gross revenue for the third quarter, including $14.7 million in excise taxes, was $97.7 million. Net revenue for the third quarter ended December 31st was $83 million. Net revenues in the quarter represent a 282% increase over the quarter ended December 31st, 2017. Recreation accounted for approximately $59 million, or 71% of total net revenue. Medical was approximately $16.5 million, or 20%, and the remainder related to devices, merchandise, and clinic revenues of $7.5 million. The company also reported net income of $74.9 million,
DG, we're just
or
trying to get
cents per basic share, as compared to $11 million, or 1 cent per basic share,
to the call.
and fully diluted share a year ago. The Q3 fiscal 2019 fully diluted EPS was a net loss per share of 38 cents, and that's due to the dilutive impact
Aurora,
of assuming the convertible debt was converted at the beginning of the quarter. I'll comment on earnings
deal
in a few minutes.
imminent.
The adjusted EBITDA loss, however, was $75.1 million as compared to $57.7 million in Q2, and $5.7 million loss in the same quarter last year. I'll also comment on adjusted EBITDA shortly. In the 3 months ended December 31st, 2018 and 2017, oils, including soft gel capsules, accounted for 33% and 23% of product revenue, respectively.
This guy's
in the third quarter, approximately 30% of recreational and 42% of medical sales were comprised of oils, including soft gel capsules.
See, guys, what are we up?
The total quantity of cannabis sold during the 3 months ended December 31st was 10,102 kilograms and kilogram equivalents, up from 2,330 kilograms and kilogram equivalents in the same period last year. Cannabis shipped on a wholesale basis to a provincial and territorial partners, called B2B, accounted for 7,831 kilograms. Sales through our own retail channels, stores in Newfoundland and Manitoba under the Tweed and Tokyo Smoke brands, and through e-commerce totaled 906 kilograms and kilogram equivalents. The remainder was sold through our traditional medical channel.
Plug Power is
the increase in kilograms and kilogram equivalents sold in the third quarter was clearly due to the launch of the Canadian recreation market in the third quarter, offset by lower medical revenue due largely to the initial adjustment to the available legal recreational market, and additionally the migration to a more limited medical product range, impacts that we feel are short-term. We remain bullish on the medical market in the coming quarters, particularly as more CBD oils are cleared for sale and become available online. The average price per gram of cannabis sold in the recreation channel was $6.96, and during the third quarter of fiscal 2019, the average price per gram of medical sales in Canada was $9.77, representing an increase of 19% over the prior year. And the average price per gram of international, which is really Germany at this point, for medical sales was $13.28, up from $12.61 in the prior year's quarter.
In Germany.
Overall, during the third quarter of fiscal 2019, the weighted average sales price was $7.33 per gram, representing a decline of 12% from the same period last year.
Here, please.
As I indicated just a minute ago, the average selling price declined in the third period.
Hit that like button if you think this guy's going to put us to sleep
due to
before the conference call ends.
Crown Corps in the recreation market. In the third quarter of fiscal 2019, the company harvested 7,556 kilograms, down slightly from last year due to the timing of harvest, which are occurring in the current fourth quarter, and with the larger greenhouses undergoing fit-ups and early pilot harvest at Mirabel during the third quarter that just concluded. As well as we had 8 grow rooms in the Smith Falls facility diverted to fulfillment activities to meet the recreational launch.
Everyone hit that like button.
With close to 2 million square feet of greenhouses in BC, Quebec, and Ontario licensed recently, including 1.1 million square feet licensed in early October, to bring our total licensed platform to 4.3 million square feet, we expect the amount of cannabis harvested to increase in the coming quarters and reach productive utilization. Now turning my attention to gross margin, the cost of sales included the impacts of operating costs of cannabis cultivation subsidiaries not yet fully operational, including our Delta greenhouse and a number of zones at the Elder Grove greenhouse facility, both going through fit-ups, as well as Fredericton and our greenhouse in Denmark, also in their final inspection phases. Mirabel was also in its first pilot growth cycle last quarter, which combined with the other non-producing assets to result in higher temporary, underutilized overheads or period costs.
Thank you guys for tuning in.
We expect to see Denmark beginning to supply European markets this coming September, and also to contribute
keeping
to the
me
margin.
awake from this.
Cost of sales also included costs associated with developing and testing edible and beverage products for which markets will be available in calendar 2019, later in calendar 2019.
You gotta close.
Excluding the costs associated with these not yet cultivating facilities totaling approximately $13.1 million, and medical excise taxes absorbed by the company of $2.1 million, the gross margin before the fair value impacts and cost of sales and other inventory charges would have been $33.5 million, or 40% of net revenue, instead of the reported $18.3 million. On the medical excise tax impact, management decided to absorb the excise tax in order to ease the burden.
I don't know what's up with these guys whispering.
The company believes gross margins will improve in the coming quarters when all of its cultivation facilities reach full utilization and cycle through the initial pilot harvest to be high-performing assets.
Canopy is surviving.
In addition, margins are expected to benefit when edibles and beverages are introduced later in calendar 2019, with lower costs of active ingredients per serving, all combining to drive more margins north of 50% in the coming quarters. Next, turning for a moment to operating expenses in the fourth quarter of fiscal year. Sales and marketing expenses for the 3 months ended December 31st were $44.9 million, up by a little over $5 million from the second quarter of this year. The company made a strong push, such as the high pop-up and billboard campaigns in the lead-up to October 17th, when the Cannabis Act went into effect, and then placed further restrictions on advertising and promotion. As has been highlighted previously, the company continues to make significant investments across all areas of our business
yes,
to
Josh,
strengthen the company's leadership position in Canadian and global medical cannabis markets, as well as for the recently launched recreational cannabis market here in Canada. Sales and marketing expenses include costs associated with the development of branding, marketing, education campaigns, the development of new permitted
pre-market Canopy's reacting
pre-rolls, the development
better
of
than Aurora,
product packaging, the development of cannabis retail,
we'll see what happens,
as well as education programs and costs associated with the company's medical outreach program. These expenditures represent the company's view that strong brand recognition is, over time, essential to the company's successful market share acquisition strategy, particularly in the new recreational market.
Basically, Aphria is saying
these costs represent a strategic
we're not
upfront
that
investment
fraudulent anymore,
which management believes will have a long-term benefit in customer acquisition and retention. Further, the company is making these investments to aggressively seek new domestic and international business opportunities.
ACB up 1.8% in the pre-market.
G&A expenses for the 3 months ended December 31st were $46.1 million. Management believes the foundational investments that Canopy is making across our corporate bench, as well as in operations, IT, supply chain, finance, legal, and the aforementioned sales and marketing area, represent a prudent long-term investment to strengthen our leadership position. Both sales and marketing and G&A expenses were up significantly over the prior year's third quarter and the most recent second quarter, but management expects these expenses to level off in the near term, particularly in our Canadian operations. Gear. R&D expenses for the 3 months ended December 31 were $5.3 million, or 6% of net revenue. In comparison, R&D expenses with the same quarter last year was just $300,000, or 1% of net revenue.
Sir.
The company's R&D team is researching a variety of intellectual property opportunities, including those related to growth patterns under different environmental scenarios and the genetics of various strains. The development of patent-pending technology related to equipment that the company has engineered specifically for the cannabis industry, and ongoing R&D work being performed in the company's dealer license area that is expected to lead to the development of new cannabis-based product form factors that will enter the market when permitted. With the acquisition of Canopy Health Innovations, the additional scope of R&D being undertaken, and additional resourcing necessary, R&D expenses were up significantly over the same period last year and are expected to increase in absolute amounts over the coming quarters. Acquisition-related expenses for the 3-month period ended December 31 was $4.5 million, and these expenses primarily related to the acquisitions of Ebu.
We've got the article on Aphria. We'll read it after this call.
In addition, acquisition-related costs were incurred due to the ongoing evaluation of potential acquisitions performed during the period, and increased legal, accounting, and strategic business consulting services required to evaluate, negotiate, and complete these transactions.
Aphria Special Committee finds no issues with Latin American acquisitions.
We expect to acquire additional strategic assets in the future as we pursue our business strategy.
We'll read that out later.
The non-cash share-based compensation expense related to options granted to employees and consultants of the company and to acquisition-related
Mike's got a couple of joints holding his eyes open.
The total $63.9 million. In practice, all employees of the company receive stock options as part of their compensation package, and I note that we had 2,700 employees at the end of the third quarter as compared to 700 a year ago, and even 2,000 at the end of September. Acquisition-related milestone payments based on future performance and related criteria have been treated as stock compensation expense instead of being allocated to the purchase price. In comparison, the non-cash stock-based compensation related to options granted to employees and consultants of the company and to acquisition-related milestones in this combined last year was $17.9 million. Again, we had 2,000 less employees a year ago.
Cost per gram, $2.
Now I'll turn my attention to other expenses and net income. Other income was $235.2 million for the 3 months ended December 31, and it's primarily made up of fair value changes on financial assets and financial liabilities. The amount includes a fair value gain of $186 million, rising from a decrease in the fair value of the senior convertible notes from the end of the second quarter to the end of the third quarter, and a fair value gain of $36.5 million on financial assets, principally the TerraSand and Slang warrants. The company also had net interest income of $18.6 million on cash and marketable securities. This income was partly offset by a loss of $6.3 million as a result of the TerraSand restructuring, which resulted in the exchange of the TerraSand shares for the non-voting, non-participating exchangeable shares under a plan of arrangement. Third quarter net income after taxes was $74.9 million, or 22 cents per basic share. And as I mentioned earlier, due to the calculations involving the assumption of the convertible debt at the beginning of the quarter, it resulted in a loss of 38 cents per fully diluted share. And that compares to net income of $11 million, or 1 cent per basic.
Did they forget about the 38
in the same quarter last year?
cents loss
Next,
per
I'd like
share.
to review our supplemental non-GAAP measure, adjusted EBITDA.
Loss per share.
Adjusted EBITDA is defined as earnings from operations as reported, before interest, tax, and adjusted for removing other non-cash items, including stock-based comp, depreciation, and accounting for biological assets and inventories, and then further adjusted to remove the acquisition-related costs. We reported adjusted EBITDA, believing it is a useful financial metric that will help investors assess the operating performance of our business before the impact of investment, acquisitions, income taxes, and non-cash fair value measurements. Adjusted EBITDA in the third quarter amounted to a loss of $75.1 million, compared to an adjusted EBITDA loss of $5.7 million in the same quarter last year.
Million.
The higher adjusted EBITDA loss is due to the matters I described earlier with respect to the non-producing facilities, which are temporary, and absorption of the medical excise tax, which was a conscious decision that we made to support our customers.
Neurosis,
and along with the investments committed in sales and marketing and corporate infrastructure to develop global opportunities, as I also just described.
Fellas.
We believe our deliberate and ongoing investment in building the company's production platform, brands, international reach, partnerships, and operations, which directly impacted our adjusted EBITDA during the period, is necessary to strengthen the company's global leadership position. Up 3.5%. Now, quickly turning our attention to the pre-market is anticipating that this guy might stop talking soon. Cash equivalents and marketable securities available of approximately $4,915 million, up from approximately $322 million at the end of fiscal 2018. The increase from the end of last fiscal year was due, obviously, to the investment of approximately $5 billion by Constellation Brands in November, June's issuance of convertible senior notes with an aggregate principal amount of $600 million, offset by cash used to fund operations, as well as investments in facility enhancements that have totaled $568 million year-to-date. The company's excess cash resources are invested in government-backed liquid treasury bills and bonds. And I'll comment now, actually, and interesting, that we're now banking with or investing through most every major Canadian bank, 5 of them, as well as 6 major U.S. banks. I should also observe that the fundamental change notice issued in September on the convertible notes expired in early December without any holders exchanging shares, so that the make-whole provision expired and the notes remain outstanding at December 31. Inventory at December 31 amounted to $185 million, up from $102 million at the end of March. And at the end of the quarter, biological assets amounted to $31 million, up from $16.3 million at the end of last fiscal year. Together, inventory and biological assets totaled $216 million at December 31, up from $118 million
now I'm out of
at
coffee,
the end of last
guys.
year. Inventories are continuing to be scaled to meet management expectation of market demands, including demand from the legalized recreational market and sufficient choice for our medical customers. Management continues to believe that significant demand will develop for cannabis oil and particular soft gels in the recreational market. As such, the company continues to increase inventory of extract-grade dry cannabis, held for conversion, and increase the quantity of cannabis oil and soft gel caps we have on hand.
Shout out to my 5
And now
haters.
I'll just take a brief moment to acknowledge the CFO transition that was in yesterday's press release.
We'll just keep highlighting
After much consideration over the past number of months, I made the decision to retire from the CFO role at Canopy later this calendar year, and I informed Bruce, Mark, and the board in December. After being in this role for 4 exciting and very busy years, helping the company through an aggressive phase of growth with some 30 M&A transactions, and I always say so far, multiple financings raising $6.5 billion and historic stock market listings, including the first for a cannabis company on both the Toronto and New York Stock Exchanges. I really believe now is an appropriate time to hand the reins over to a new financial executive to shape and drive financial capabilities over the next 3 to 5 years as the company prepares for its next phase of growth.
Joshua.
I have to say I love being CFO of Canopy Growth, working with Bruce and Mark and the Canopy team, but with the personal commitment I gave, there is a toll on the family, and it is important for me to make my family a higher priority. The company has already initiated a search for my successor with candidates identified, and we expect that person will be named in the coming months. I wish to stress that following the transition to a successor, I very much look forward to continuing to serve the management team and the board of directors in strategic advisor role to help drive Canopy's future growth. The experience I've had working with this dynamic team, helping build this company in this new sector, has been a once-in-a-lifetime experience. I've often said I feel like I joined Seagram's in 1933. It's just been a fantastic opportunity. The next phase will continue to see me go hard for Canopy Growth. I'll have fun, and as we say here, we will get shit done. So this concludes my review of the financials for the third quarter, and I'll turn it back to Bruce for some closing remarks. Bruce?
Great, thank you, Tim.
Stock's going to fly now. Bruce is back.
A couple of additions as we look out. So Tim has isolated and highlighted on the investments we make and how those are coming onto yield. So in Canada, we'll see that shortly. He touched on Denmark. We will begin over time, as you noticed, our reporting to become more detailed and broken out. We're going to target giving you a picture over time, meaning this year, which will give you visibility of how Canada, as an instance, is operating and the appropriate allocations of that. That's one of our goals on a reporting for the investors. But I do want to highlight that the objective of creating platforms will have other jurisdictions which will use cash, which is why we have cash.
I gotta agree, Jay.
As far as the U.S., and I hope there are some questions on it,
sir.
We have identified the site and locked up the site in the New York State area with a couple of other backup options.
What's up?
We've had very productive discussions with the regulators, our license, and the platform we're building out, as well as some incremental pieces that we think would fit together. So the U.S. action is moving quite quickly. Our Latin America activities haven't had as much visibility because we've been, I guess, eligible to keep them a little quiet, but that group is now about 70 people operating across 4 countries with production assets well underway in construction, which will start to show up as, real, I'll call it, both assets and yields over the balance of this year. And I think now we could probably jump into some questions.
Oh, question time.
Okay. To ensure an efficient call that gets to the questions of as many analysts as possible, analysts are requested to limit one question and, should it be necessary, one follow-up question. In the event analysts have an additional question, they are welcome to re-enter the question
up 2% in the pre-market. Canopy up 3.14%.
Your first question will come from Tammy Chen from BMO Capital Markets. Your line is open.
Thanks. Hi, Bruce and Tim. I was just wondering, on your average selling price for the rec channel, almost $7 a gram. First, could you confirm if that's gross or net of excise tax? And I was also wondering if you could elaborate a bit more on just exactly where and how you're seeing this strong pricing in the wholesale channel.
Even fighting.
All the average prices are quoted are net of sales tax, so that's after the excise tax is taken out.
And where we're seeing, Tammy, the most active selling points aren't correlated directly with the per capita number of people in the province. It's strongly connected with those places that have stores, and we expect in circumstances like Ontario will have stores, that is a driver on people being informed. And so we've put quite a lot of time and money into our education platform. And I think we've educated over 600 people who work in the cannabis sector as salespeople with a self-paced training program, which means that the customer walking in is much more informed. And I expect the average price over time, meaning by Q4, to actually increase because the format and the stores will have much higher end products, including we expect beverages, which when you get into our
we've got 8 dislikers, so
our
vape don't like when
products,
I talk.
which we have been putting away oils for and building technologies for and our whether or not we get to make edibles of some sorts. We've worked through a variety of platforms, and the beverages, all of those we expect to drive to a higher margin per actual gram sold because of the other adjacent ingredients.
So my understanding was that for many of these provinces, it was the provincial Crown Corp that was the wholesale buy, and so I thought pricing was through a more negotiated process.
Stop talking
it's
if
just
you hit that
surprising
like button.
It's such a strong pricing that you're seeing. So are you saying that in certain provinces, is there like a sell-through directly to retail, or?
No. So the provinces negotiate them, and then the volume that goes through the province has connected to the points of sale the provinces have. So we've seen strong sales in provinces like Alberta with more retail, and we expect the same to be increasingly true across the country as more stores open up. So it's to wholesale. Then after that, we have certain circumstances where we actually also then have a point of sale. Think of Newfoundland or Manitoba or Saskatchewan coming up with Alberta. Now, in that model, what we sell wholesale has been originally it was bulk cannabis dried. As the quarter ended, it included gel caps. We've now launched our rolled joints, and I think our sales of those units are well through 50,000 units, but what we like about them is we now make them in 1 gram, half gram, and they're made on extreme narrow tolerance platforms, which we had to create and then file patents on. And so those produce upwards of, 10,000, call it, units we could produce in an hour. So now we're looking at how do we use that equipment in a variety of other locations that might make sense if you could export the technology. So I think you're going to see the average margin go up as more and more of these products hit, but the model is to the provinces and then through the stores.
Okay, got it. Thank you.
Your next question will come from Vivian Adler from Cowen. Your line is open.
Hi, good morning.
Good morning.
So I wanted to focus on the top line, Bruce. So when we spoke last quarter, you were confident in reiterating your confidence
Good morning,
in
Tom.
consensus for the back half of fiscal 2019.
Gotta do that live stream soon.
And consensus has come down, so the third quarter was in line, but your production in the third quarter declined sequentially relative to 2Q.
Came for president,
so how
I'd
should
vote.
we think about 4Q relative to 3Q?
I'd vote.
Okay. Yeah, so we're not giving, exact EBITDA or top line, but we do have inventory growth, and we have harvest, as Tim called it, the timing of the harvest. So really, we're comfortable we have the product set that will get to the number. What we're always looking at is where is the demand, who's getting the stores up, what's the sell-through like. But we think we do have, in fact, especially as oils are becoming presented as a more significant portion and what we think of as a bit of a backlog for exports to places like Germany. We're not pushing down or up on what we're looking at for the balance of the year.
Okay, perfect. And then just to follow up on revenue, when you spoke at the CAGNY lunch in New York in December, you articulated that you believe that you would have the CBD products in the U.S. commercially available by the end of calendar 2019. Just wanted to see if that still holds, number one. And then number two, on the CBD and your revenue outlook, you were quoted in an interview a week or two ago saying that you were open to investing as much as $500 million against the U.S. CBD opportunity, and I just wanted to understand your thinking around that because that seems like an awfully big investment for a market that I believe only generated about $500 or $600 million last year. Thanks.
Yeah, so a couple of things. We have put where we're going to be in New York State, and it's in large part because of the regulatory framework New York State's put in. People may have noticed a week or more ago where the regulators are starting to, at a New York State level, enforce the fact that CBD is something which needs to have proper claims, proper processes, source of access that's actually traceable. So I think New York State's going to be a strong market. Right now, will we have it in Q4? I think we're still on a track that would expect to have products in the markets where they're permissible. So maybe New York State will be a terrific market. Perhaps California will be a tougher one, and that's more about regulation. But we're on track with acquiring the building, having third-party growers, having processing, and whether or not it's Q4, Q1, it's a function of a few things having to go right, but that's our timeline. As far as the total investment, we think there are going to be multiple states where we have to operate production and processing of hemp, and that there'll be industrial park scale. That asset group and the channel we sell through will lend itself extremely well to cannabis if and when. And so we view these investments as creating a lawful channel to a large box and a corner store sale point of products that are disruptive to sports recovery through cosmetics and certain medical fields. But the asset group has a lot more extension over time, which could be activated very easily if states' right did a go.
That's helpful. Thank you so much.
Your next question comes from Michael Lavery from Piper Jaffray. Your line is open.
Thank you. Good morning.
Good morning.
As you talk about looking out 5 to 7 quarters, how should we think about the margin and earnings piece of that, and what sort of trajectory does that look like?
So
Sour diesel.
We kind of touched a little bit. We're going to try to give you very good visibility on the earnings by country, by category, meaning medical, rec, and product type, so that we can actually help you, the analysts and investors understand the yield potential on the invested assets in a country like Canada. And then what we wish to do is back out and normalize investments that we're making intended to be globalized. So Tim will speak to the margin opportunity on a country like Canada, but you will see bets laid down, meaning investments in assets that are in geographies that are beginning medical programs at a federal level with a population sufficient to return in that country on the invested capital without exports. So Europe as a region, we have a strategy of investment that covers 4 countries. South America, 4 countries. Australia, and each of those will have yield that goes out over anywhere from 1.5 to 3 years.
8 more.
Tim, I don't know if you want to speak to the margin that we are looking at, but it is a sequencing of a creation of a very good business in Canada to reflect all the other jurisdictions where we think it can go.
Yeah, so where I commented that we had some, non-productive assets in the last quarter. This is intentional in terms of going through BC Tweed, the 2 Alder Grove, Delta facilities, and like I said, Mirabel was really just going through its first grows, which we would call the pilot grow. So those are now planted and growing, and harvests are planned this fourth quarter, and I think you'll see that they'll continue to improve the yields and get full utilization. So those margins will definitely move up as we get the almost 4.7 million square feet of greenhouse and later about 1 million square feet of indoor grow being fully productive. That's just in Canada, of course. And then you've got, as we mentioned earlier, Denmark coming online later this year. So getting full utilization will remove all of those costs that are hitting the margins today. At the same time, you get the other form factors that we talked about.
This is the
edibles
Whisper
and beverages
guy again.
And also, I think you see the medical market. While there's some cannibalization in the last quarter, we also believe that those come back strong, and those attract higher average selling prices. So all that to say is that we set a northward march on those margins, so that you get in the mid 50 range or plus
Canopy Whisper
in the quarters that are coming.
Sorry, what was the last part you said? The mid 50 range of.
That's true.
Is that the margin?
That, guys, get me to 100 likes.
Margin.
Oh, never.
There's already.
And just on the margin side, as you look at your, call it 5 to 7 quarter planning horizon, would you still imagine the total company picture to be investment mode and growth mode more than we should be thinking about any kind of positive earnings coming out?
You will see a model for Canada. It's a function of otherwise regulatory turn-up.
Right,
how fast does it happen in America would obviously affect how much we're putting in, and how fast the transition is. And we think it's happening quite quickly from what was called medical marijuana to what we think of as cannabinoid therapy. And so the opportunity, if the IP results from our trials in Canada, that some of them are expected to have the potential for claims as early as Q4, that does start to put quite a bit more potential for margin, because you're no longer selling medical marijuana, you're selling outcomes on a cannabinoid therapy. So the walk around that, I guess, would say it depends on what happens on a regulatory basis, but we see a very good line of sight in Canada and Europe. America is the big unknown at this minute.
And is that calendar or fiscal Q4? That's calendar year?
Calendar for the trials. Trials do have the ability to go slower or faster, but some of the work that we're doing on the phase 2B for human and some of the work on dogs, the current schedule would look at a calendar Q4 for initial results and ability to make claims or not. So these are not decades out kind of activities.
Canadian dollars.
Thank you very much.
Your next question comes from Martin Landry from GMP Securities. Your line is open.
Good morning, Martin.
Good morning.
If we want, I'm going to assume Martin's question was about margin, but I don't know if you want to take the next question.
Hi, sorry, I was on
there. He is.
My apologies. Good morning. It is on production costs and margins. Actually, you're right. Just want to dig a little bit further into when you say that we exclude your non-cultivating assets, your gross margins are around 40%. Your average selling price is $730. So that gives me a production cost of around $4.25 per gram. It looks a little high, and I'm surprised that it's not trending down. You have large facilities now in production. Can you explain to us a little bit better? What is embedded in that cost and why it's at that level?
Yeah. So I mean, it's like I said, we're between Delta, Aldergrove, and Mirabel.
Canopy up 4%.
They're not producing a product that is actually being sold. There's the operating costs. There's still being incurred during the quarter, and those flush right through the bottom line without the benefit of getting production out of it. So essentially, your denominator, like there's no denominator of grams produced in those periods while you're doing fit up. So it's a bit of an artificial number that's being created to come up with a cost per gram because it's not apples and apples. When those assets are fully producing, all those costs will be matched against production, and that you'll get a lower cost per gram. So it's just a quarter that we had to invest in and make those changes in the facility so that they can be up and running and producing high yield plants.
And Tim, maybe additional color to that. We're seeing at the end of this month and into next quarter, those harvests are actually coming off of a larger platform. So when you picture a greenhouse, it's not 1.7 million square feet. I know you've been out there, Martin, but for others on the call, think of it as 5 to 7 zones. And what you can't do is plant it all the first day and then harvest it all the next 9 weeks later. So it's the rotation of getting all of the zones both retrofitted and then into production so that it's a continuous flow harvest. And the good news is most of that investment is complete, and the continuous flow harvest equipment has been thought through, and some of it patent protected seeking, and that the supply chain is near the top of the cycle to start producing out. The exception to that is our Newfoundland facility is the furthest out from completion, but we're looking at something there that's in August, September. But otherwise, New Brunswick, BC, and Quebec are largely finished, with the next thing being extractors, not actual production assets, but conversion assets.
Okay, and then maybe just switching gears, you're realizing a very high selling price internationally, and I'm just wondering at this point, what prevents you from shipping more products internationally?
Turn that heat on, bro.
Excellent question. So last quarter, there were a lot of changes, and the regulators were pretty busy, and so were we. So getting actual approvals through was not as fast or smooth as normal course. I believe we're returning to normal course, and in the interim, there is quite a lot of demand in those geographies. So as we all know, Q3 was pretty crazy in being a regulator and a producer. Both of the parties were, I would say, full up, but that has been a priority we've been focusing on since January with the regulator to increase the volume that we can ship while continuing to fill all of the channels in Canada.
So it's not a case of production not being available. It's just more.
The stocks are covered a lot in the pre-market, 4.3%.
Yeah, so each time you ship, it has to be requested by the foreign jurisdiction and approved by the Canadian jurisdiction, and then the product has to be available and go across. Principally, it has been the paperwork, not the product, and I think we're highly focused on the paperwork and the product being available this quarter and next.
Aphria's on a rocket ship.
Okay, thank you.
Your next question comes from John Zamparo from CIBC. Your line is open.
Thanks. Good morning, guys.
Good morning.
I wanted to follow up a bit more on that U.S. CBD opportunity. It's encouraging you expect to have these products in by Q4. I was hoping maybe you could share what some of your most impactful products would be, what retail channels you're prioritizing, and just generally, can you talk about your discussions with the FDA and regulators in the states outside of New York?
Those are all great questions, and I'd have to think that if I gave a really clear and full answer, that would be advantageous to parties. We're not here to help. So when we look at who is interested in speaking with us, it goes from big box to corner store. What product producers? It goes from things that people are already selling into cosmetic to animal care. And we've announced our intent on trials in the dog area, and there are, we think, capacity to create a range of products.
Should we hit it?
We are going to be selling finished goods that are powered by, and in many cases branded by, divisions that what you would call health and wellness. And so the FDA file has been and being developed, but the regulation is also a state level lead in a place like New York. And so this was about a great launch platform with very good regulators that lead to a medium-term FDA file that we think will be quite helpful, but we don't have that and need it to start in New York. And we have a very skilled and substantial team, which included people we took from Green Star Constellation and really key people in our organization and hires that are all U.S. focused and on this file.
Baby.
So it is a really live, really active file, and lots of moving parts, but I think it will have a potentially serious impact before the year is out.
Okay, that's useful, thanks. And I wanted to follow up on a comment you'd made at the beginning of this call, Bruce, about moving to phase 2B of the clinical trials for insomnia treatment. When might we see commercialization of this, and is the more likely result that you have new products to treat this, or is the benefit that you have now legitimate claims that your existing products can treat it?
So it's claims on dosage and a uniqueness potential protectable on delivery mechanisms. And it becomes a platform by which you can then increment and adjoin what we have with perhaps other claim-based inputs. And it allows people to go to a doctor and say, see, I told you.
Come on, guys. Let's
in fact, it does work, and I now want to have access. So I think it moves the needle on legitimizing. I think what many people understand is that from our observational connections with our client base, the second most common reason they're acquiring cannabis is to fall asleep or stay asleep. And if we can turn that into a form factor delivery mechanism and then a science set, you really do move the needle. And it's just the first effort with the drug master file and stabilized ingredients that can add a whole bunch of other trials on behind. And, we have a dozen plus that are mapped out and rolling up. So it's a lot of leverage for the patients, and I think it gives us a really good platform product to go out with. And nobody really does love the current sleep options.
Oh, man.
Okay, that's great. Thank you very much.
Your next question is from Oliver Rowe from Scotiabank. Your line is open.
Good morning. It looks like you achieved a 30% market share in the recreational market this quarter. I think that's in line with your target, and it's in line with mine. So my question is, as other producers catch up in terms of bringing production online, is that a target you expect to be able to hold? And is it one that you think you can bring into the international markets as well?
Well, I think within two calls, we're going to hardly talk about production, and we're going to talk about conversion, and conversion into what? And where we've made really significant and thoughtful investments has been to be in the conversion and creation of products that create customer demand and brand that wins. And so I would be kind of upset if we can't maintain or improve, because we're far enough ahead and have been thinking that way and working on things for 3 to 5 years that I think are just going to be ready to take hold in the next 3 to 7 quarters. So I hope someday people don't even want to know about how'd you grow that, because that's really a necessary step, but it's not the core focus.
Holding on to
so yes, we should dominate, and I will be extraordinarily disappointed if we don't do that through science and claims and products.
Damn.
So as a follow-on from the conversion angle, you've recently inked deals with third-party extractors. Could you discuss why you're moving a portion of that business out of house, and if this is more of a temporary measure as you bring your own facilities on, or is there a structural benefit to doing it out of house?
It's really an accelerant to the opportunity at hand. Our platform that we're building is quite a lot larger and more scale, and some of it's co-located with large production grow greenhouses. So we just thought these were very useful sources of conversion. I bet there'll still be business with them to fill gaps. That overall model, I think, is a very thoughtful place for people to have created value, but it's certainly not a core move out. We really have put a lot of IP effort on how do we get to API level of extraction, and so this is a really smart way to get a little faster now.
Get another coffee.
Thank you.
Yes, I know.
Your next question comes from Graham Krendler from 8 Capital. Your line is open.
Yeah, hi, good morning, Bruce and Tim. Thanks for taking my question here. I wanted to ask about the U.S. market. Flipping through the MD&A here and understanding that the company doesn't want to invest in any company, or I shouldn't say invest, operate in any country where it is not federally permissible to operate cannabis. The MD&A mentions the States Act as a framework that they think would allow cannabis to be federally permissible. So my question is, with something like a SAFE Act that reconciles banking, does that give you an accelerant towards potential investment or strategic partnership in the U.S.?
Yeah, so anything, and there's many variants right now floating around, some are bipartisan working through, and our lobbyists and crew are watching it. Anything that would allow at a state level the activities that currently occur in the state not to be offside federally, and as a result enable parties like NYSE to see it such that our listing would be maintained, immediately mean that we're in. And so there are a bunch of formulations that could result in us being able to immediately enact our plan in any of those states. And it's feeling more likely that it's sooner than later, but it's politics. So hopefully that helps, Graham.
Okay, thanks. And then just another question here. In terms of preparation for the edibles, ingestibles, derivative market, looking at the inventory balance at the quarter end, 65% of that balance was work in process inventory. How is the preparation for the products in that market being handled while balancing also the allocation in the Canadian channels as well as internationally?
Before the market opens.
And what's your demand forecast on Q4 of this year? So we find that oils are an extremely likely stabilized ingredient to fit into everything from beverages to edibles to vapes. So we're working on accumulating oils. Part of the prior question on why are you using these guys is because you need to have it in a state where you can actually then opportunely convert it to where you want. Tim, I don't know if you want to speak to allocation, but it is a continuous active juggling act where the first to get it is science, second is patient, third is export, fourth is rec. And it's a constant, our Canadian COO has a full-time function of allocation. Tim, do you want to speak to any more?
Well, yeah, no, that's exactly it. The operations group constantly looking at supply and demand forecasts and allocating what do we need, the variety and formats. And so they think about that, sweat about it every day, and making those allocation decisions.
But
yeah, and so this is not a stockpiling exercise at all, and we're constantly looking at, as the provinces are turning up more stores, we need to fill that warehouse. I think we're doing a solid job, but I would say that effort to continuously deal with allocation of the scarce resource is a top 3 priority in the company.
We'll hit that button.
Thank you very much.
We're seeing the futures.
Your next question comes from Matt Bottomley from Canaccord Genuity. Your line is open.
Holy smokes, there's another question. Better make it quick.
Matt Bottomley, your line is open. Okay, we'll move on to the next question from Mike Hickey, the Benchmark Company. Your line is open.
Hey, Bruce, Tim, congrats on great quarter, your first quarter of adult use too.
We'll get into that in a second, Bob.
Yeah.
And I can confirm that it was a unique operating environment.
Ask me
a very unique operating environment.
Again.
Yeah. I bet it was.
We'll talk.
Curious on sell-through, what you're seeing in terms of consumer demand for your individual SKUs, if there's any standouts, and maybe any, in particular, the demand that you're seeing on the adult side for soft gels. And then I'm not sure how much visibility you have on sort of the legal framework that's taking shape around edibles, but would you expect to have gummies or chocolate as possible product SKUs? Thanks.
So a few questions. I would say on the data for what's selling through, really we were getting into December and January when we're actually launching in all of the soft gels that we could across the country and pre-rolls. So I think I'll be able to give you a much more accurate and crisp answer as we finish the fourth quarter, because we'll have pretty much one full quarter. everything that we can make, whether it's chocolate to drinks. We have been building out a platform, so the people who have been to our site have observed the internal chocolate factory that exists and the bottling plant that exists, and we've been doing a lot of testing and working through various formats. It's all going to come down to regulation. And so the regulations right now, it's still speculative as to, I don't know, how the cap must work on a bottle for a closure versus whether or not the glass is colored. We will have every format you can contemplate, but they are right now functionally driven by what the regs say, and the regs are coming to their final form. We haven't been waiting for the regs to get ready, but that will affect what we get to put in the market. And if it's illegal, we'll have it.
Oh no.
Okay, thanks. And then, do you have a sense of how draconian the packaging is going to be on the edibles? I mean, do you feel like maybe there's going to be a little bit of a lift of what they've done on the flower side?
Nope. Yeah, just for everybody on the call, the packaging from our perspective is okay. What we're more concerned about is the quantity and weight, and the fact that it, from a recycling and consumer preference, we wanted to launch with great packaging. We've done that, but we're really pushing on packaging, enabling this to be something that has some appeal, but for sure has some functional benefits over what's currently there. And you're seeing it, right? The debate over how does a closure work on a bottle versus a can.
Do you guys want this conference call to go into the market open?
We got out of the gate.
Want me to
everything they did was okay to good, and now it just kind of seems like it's going to keep getting better.
Me or the market, or me or the
keep your container. They may be collector items fairly soon.
That'd be good news.
Cool. Why don't we take one more call if there is one, and then I think everybody probably has a job related to the markets.
I have no. Oh, I have.
Okay, see you later, Bruce. That answers it. Okay, guys, so I'll take this over from here now. Let's just play some kind of music to keep us company. Wow, we're seeing Canopy run 6.3% up. It is exploding into the close or into the open. Up 5.96%. SPY broke resistance. Yep, so we're going to take a look at a bunch of stuff. We had some questions about gold. Jay was talking about Kirkland Lake and how I missed the run and I'm scared of it, and that is very much true. So we're going to take a look here. You know what, guys? We can pull up a really cool little chart for you. The one-day chart. And we can compare. I wonder how a comparison would look on this. Aphria and Aurora. ACB. Sweet. Yeah, so here we go. Perfect, guys. We can see this in real time. And we can compare the three stocks. Oh, no. I want 1 day. So we're seeing Aphria up 8.88%. Canopy up 6.72%. And Aurora up 1.12%. Damn, Aphria is going nuts. Dustin, we got you. We'll never be below 2 again. Yeah, it's hard to say. Hard to say. Canopy is on a run, though. Canopy's up 7%. The market's liking the call. The market's liking what he said, I guess. So this is our U.S. portfolio. So we're seeing Aphria up 8.3%. Canopy up 7.5%. Kronos up 4%. Aurora up 1.8%. Tilray and Bev in the red. Holy smokes, guys. Aphria is on fire. We're going to read that article about Aphria in 2 seconds. I just want to see the rest of this open. Look at DGC. Alrighty. Man, Aphria's on fire. DGC. 3-month chart. Damn. That's a wild run. Yeah, that's looking pretty good. I got a link to a free new license article too. Alright, go ahead and drop that if you want. We'll take a look at it, but where was it? That's not what we're looking for. It's right on New Cannabis Ventures. There's an article about Aphria. IIPR prices upsize $125 million private placement. What is IIPR up to today? Let's add that to the list. This REIT has been on an absolute tear. It's up 5% again. This stock is crazy. Damn. All right, Aphria. Special committee finds no issues with Latin American acquisition. Special committee concludes that acquisition of Latin American assets was within the acceptable range as compared to similar acquisitions by competitors. Review also involved independent physical inspection of Latin American assets, confirming facilities, licenses, and employment. Provides recommendations for further governance enhancement. The company provides update on executive transitions. So there's an article about Aphria. That's clearly pushing the stock up more than Canopy. Wowzers. Aphria dropped pretty hard in the first. It was up almost 9%. Now we're up 5.7%. Could be shaky, guys. Whoa, this music's intense. Let's see what the next song is. Alright, so Canopy. The gap is narrowing for Canopy and Aphria, and we're seeing Aurora only up 0.14%. Can Aurora hold on to any of those gains? Is this going to be an initial spike, and then are we going to sell off into the open? That's what it's looking like so far. So that initial pop. We'll see, guys. We'll see. Yeah, we're getting a little bit of a pullback now. See if we can hold on to those gains. Aphria and Canopy neck and neck right now. Jeez. So what are you guys looking at today? I want to take a quick look and see. Oh, MedMen's not even on this list. We're looking at MedMen today. MedMen and Suniva again. I want to see what those two are going to be up to. Sorry guys, my chat was frozen. Alright, there we go. Never said I was holding. I don't know why my chat was all messed up for a second there. Beer volume on Aphria dying down. DXY from 97.25 now 97.05. Did Canopy make any announcements? Yes, they announced their quarter. So, as we can see, Canopy's holding on to 5.72% of their gains. Aphria's up 6%. Kronos up 3%. Aurora up 1.48%. So that's not too bad. Trying to see our comparison chart here. Nope. There we go. Alright guys, so we're going to check in on a couple more things in terms of the market. I want to see what gold's doing, what the miners are doing. Alright, so we are seeing for the open, I will cover the open for another 10 minutes and then it's nap time. Or maybe we'll stay till 10. We'll see, but we're seeing almost a 1% rally in the Dow, 0.75% rally in the S&P. The Nasdaq's actually lagging, which is fairly unusual. So we're going to take a quick look and see what are the most active stocks. Most active stocks so far this morning. Canopy Growth, number one most active stock, up 4.88%. Already 4 almost 5 million shares traded already in the first 8 minutes of trade. So that's interesting, followed by Nvidia, JP Morgan, Electronic Arts, Bank of America. Bank of America. What is the biggest decliners? New Well Brands, XPO Logistics, FedEx declining 3%. Alibaba down 0.4%. Does my dad still pay me? My dad doesn't pay me. That's funny though. All right, let's take a look at some commodities. Gold and silver are both up about 0.5%. Crude oil up another 2% to 55.5. Wowzers. Waiting for those miners to open. Why does Canadian stocks always have to have a delay? Oil looks like it's going to continue higher. Yes, we are seeing nice green days so far. Aphria is coming back. Yes, sir, the delay is terrible. I mean, I've got real-time quotes. I'm not going to log in right now, but it's super annoying that you can't just access them off of any website. Yet American stocks are real-time. Like, what the heck? It's kind of annoying. Okay, so wanted to take a quick look at the dollar. We'll keep that portfolio open. Let's take a quick look at the US dollar index. We need to drop below 97 today. I think it's about time the US dollar dropped back down to 95. All right, Jay, that's good info. Like, you mean the US miner, like the Canadian miners that are traded in the US, right? See, we could do that too. We could put US gold miners, or sorry. We'll make one. We can check what they're doing in real time. So like Barrick, Kinross. Yes, sir. Most of the Canadian miners are traded in the US too, so we can get real-time quotes. Yeah, I guess you're right about that. Gold Corp. When's Gold Corp getting bought out? Fine, we'll add Kirkland Lake. You're so right about how I feel about that stock. What are we missing? Okay, First Quantum. And you know what? Freeport-McMoRan has been on a nice run recently. Oh my gosh, it's up another 3.5% today. Man, I lucked out on this one. Freeport-McMoRan, like, I forget when we bought this stock, but it tanked all the way to 10 bucks. And then I added recently to it. This stock's been on a really nice run this past month. But I believe I added at like 10 and a quarter. Stock's doing really nice. We'll see if we can break above this like 1250 range, so it's only getting started. It's down off its $36 highs in 2015, 14. Tilt Holdings. All right, 2 minutes until the rest of the market's going to open in terms of all the cannabis stocks on the Canadian side. So we'll be taking a look at that in 2 minutes. Then I'm going to bounce soon. Soon. What are you guys up to today? Is everybody having a happy Friday? It is Friday. Sweet. Alright guys, just waiting for these stocks. Free Canopy and Aurora. Canopy is only up 3.3% on the Canadian side. Aurora's up 0.21% on the Canadian side. Man. The turtle. Aurora the turtle. We are not seeing any more quotes for another 1 minute. 1 minute, we'll get all the quotes. See what we're opening. Organogram. Organogram's awesome. Yes, Jay. Oh, yeah, I remembered. Save that cash, baby. Organogram's a great company. They've had such a nice run. But I like to find those ones at those 52-week lows, so Organogram just a little too expensive for me right now. Just like Hexo. If I had a choice, CanTrust, Organogram, and Hexo. Those are some I'd look at. They're just too expensive for me, though. It's free music. Next. Alrighty. Okay, so we're gonna get this open now. Finally. Let's see, guys. What are we doing for the day? What are you up to? Aphria Relentless 48 North up another 5% to 83 cents. Evenco up 3.5%. If you watched our collab yesterday, KHRN, you're talking about Chiron Life Sciences. The hype's coming. The hype has been here. The stock exploded already, but that doesn't mean it couldn't keep running. So maybe right. I just don't like to touch charts like these, but some stocks you never know. They could just keep on running. I'm waiting for a pullback though. I'm not buying too much right now. I'm waiting for a potential pullback. Relentless, #1 gainer so far on the day, up 6.25%. Followed by Aphria, we're seeing the whole sector up 3%. Man, Aphria Health recovered quick times. What is on sale today though? That's what I'm more interested in. Pure Global Cannabis, we're not seeing many decliners at all basically. Biggest decliner, Pure Global Cannabis, down 1.8%. Ain't nothing on sale today. Let's see. Stocks for 2019. What is on a shopping list today? Northwest Healthcare Properties, down 4.4%. We're going to have to add to this stock today. 100%. Buying more of that. Always do your research, guys. Never buy anything that we say. Do your research, do your due diligence. Always, always, always. Barracks down 1.11% today. Aurora Cannabis dipping into the red. Activision Blizzard. What are our biggest gainers? 48 North, International Cannabis, Freeport McMoran, First Mining Gold. FSD Pharma, is that in the green? Holy. Sale is coming, she always does. The famous Latin American actress Catalina Arizabal is a spokesperson for Cuida, CBD cosmetic line owned by Chiron. I'm sure that's very good. Just want to do a quick little bit of research here, guys. We're going to take a look at Northwest Healthcare Properties, looking to beef up our position in these types of REITs. So let's figure out what the heck happened. They probably announced a weak quarter. Let's Google it. All right, let's see what happened. Whoa. 17 hours ago. Oh, it's a bought deal at 1065. $125 million bought deal of trust units. All right, so gonna be picking up a little bit more of this bad boy. US dollar holding steady at 97. Psh, get out of here. Get out of here, US dollar. Gold's holding steady too, though, at 13.19. So, guys, I want to take a few more requests. Any more requests before we end this stream? It was a good stream with Canopy. So far, the market's in the green. We potentially could do one more stream after lunch, and then our market minutes at the close. So, okay, NVA. We will take a few more requests. Thank you, Jay, for always requesting those interesting stocks. New Vista Energy. Another one I haven't heard of. $1 billion market cap. Let's see what they're up to. Gas, oil and gas. 66 employees. Exploration and production company, which is engaged in exploration, development, and production of oil and natural gas, Western Canadian Sedimentary Basin. Okay. Definitely one to watch. No dividend on that one. I really want to enter a long-term position in ACB. What are your thoughts on putting in a limit order for 7 or less? Must be American. It's a hard one right now. All I can say is do your research, do your due diligence. Don't get FOMO. Right now the market continues to climb. The S&P 500 is getting really close to that target I have of 2,800, and I feel like we're going to see some kind of pullback soon. So just be cautious. Do your research always. And I would say be patient at this point. Yeah, I don't think we're going to 7 Canadian for ACB for a while. And if it does, then I'm buying 100%. I'm going to buy for sure. But honestly, right now I'd be cautious about buying. And yeah, just watch the markets. I think we could see a 5% pullback once we hit 2,800. I think we're going to see some more volatility. If I was looking at anything right now, I'd be buying in chunks. I would not be buying all at once. Yeah, don't get FOMO. Don't get FOMO. Like, for example, positions in our recent... The FOMO is too real. The recent positions that we took in Suniva, MedMen, FST Pharma, Oxley, all those ones, just buying incrementally. So like MedMen, bought it over $4. Now I'm gonna wait a bit. Maybe wait another week or two. If it drops more, buy a bit more, but never all at once. Yeah, so that's from what I've learned, is just always keep a little bit of cash on hand just in case. If you're long-term on the company, yes, it's called patience. Sometimes you got to average down. Like here, just show you something real quick. If you were trading ACB for the last 2 years, like I did, you know, if you're, say you started in 2017, you made a ton of profits. Maybe you sold it halfway. Maybe you sold it at $8, whatever. It went to 15. This is kind of a bad chart to show. Let's zoom in a little bit more. 3 years. I need the 3-year chart. It's exactly what I need. All right. And then, you know, you're patient. It went to $8. You bought a little bit more. You're patient. It went to $5. You bought a little bit more. It went up again. Took some profits. Then it went down again. I mean, it's all hindsight, but it's hard to say. But yeah, so when you're accumulating, obviously you're buying it when it's at its lows, and you're potentially considering a sale when it's at its highs, taking some profits. So it's easy to compare the past and say, oh yeah, I could have just bought it at 2 and sold it at 14, and bought it at 5 and sold it at 14, and bought it at 6 and sold it at 10. But you're never going to time the tops and the bottoms perfectly. But have your numbers. Like, if I'm looking at ACB right now, I'm thinking, oh shoot, it could potentially go back to all-time highs maybe, or it could potentially go back down to $5 or $6, or maybe somewhere in between. So that's what I'm saying right now. Let's say I had $5,000 to invest into ACB, maybe I'd buy $1,000 now, and then I would wait. If it goes to 8, maybe pick up a little bit more. If it goes to 7, maybe pick up a little bit more. If it keeps dropping, maybe just ride it out and not put all your money in one company. But that's just my take. That's just my strategy. Always do your research. Always do your due diligence. Don't buy anything that we're talking about. I'm just trying to offer simple strategy. So yeah, that's it. Yeah, everyone was so bearish at those lows. Remember the mood in November. Red after red after red. It's true, but I mean, people get so emotional. Buy when people are crying. Buy when there's blood in the street. And it happens over and over and over again. I remember the day ACB went to $5 was when I doubled my position. I got super lucky, but still. So anyways, guys, that's it for today. This stream has gone on for a while. I appreciate everybody tuning in. Thank you for all those likes. 133 likes. Wow, it's been awesome. We still have 116 people in here, and I feel bad leaving, but it's time for me to head out. So thanks once again, guys. It's been an awesome stream. We'll always be streaming these events. I feel like I get a really great turnout. So that's it, guys. I'll probably stream one more time later tonight. Maybe. So good luck trading. See you soon, guys. Bye-bye.